Awesome. Honey Badger, of course, Sponge, and the Honey Badger team. Uh, Thank you for jumping on an episode of Mind of the Lion, bow tied Barb. Before diving into your perspective, how we got here today, Honey Badger, just wanted to share with the audience on Substack and also YouTube, uh, Twitter.com, Bowtied Badger. More content to follow, but for now, give Honey Badger a follow. He has a traditional finance background, but he's here in the jungle now, so it can't be too bad. Awesome. So, Honey Badger, your quantitative trading background. You mentioned kind of offline. You've worked at some funds in the U.S., New York, elsewhere. How did you get here today? Like the Bowtied, Wall Street Playboys roadmap. When did you start like following that blog or their Twitter and their books?
Yeah, sure. So I, Badger One, had a friend, one of my best friends, who had been following Wall Street Playboys probably for as long as I can remember, probably for, was it like 5-10 years? And it was this, I think around February, he'd always brought it up, and I never really, never really thought too much about it. Although whenever I'd read the pieces, they were always good. But around this February, he kept bothering me, and he was like, "Hey, there's this thing called STX. You should buy STX stacks." And I was like, I wasn't too into crypto then, and I was like, "What is this STX thing?" And he gave me the spiel about it, and I still didn't really get it. And then he kept pestering me about it and said Wall Street Playboys was really recommending it, and I was like, if he's going to keep bothering me about it, why don't I just go buy some? So then I bought some, and it went up quite a bit, I think, shortly after. And then after that, I followed, the Twitter account a bit more, and Wall Street Playboys at the time got a few more calls right. And so that was pretty surprising.
What time frame is this? Like, what year roughly?
Oh, this is this year. So
okay.
Earlier this year, Stacks was at like 0.8 or so, right. 80 cents when I bought it. And then, I bought it on my friend's recommendation, who had bought it on BTB's recommendation. For me, it was basically a blind buy. I just bought it because he was such a close friend of mine and was asking me to
right.
Being very convinced about it. Was getting his parents to buy it as well. That really took me by surprise. So I got in and then made a little bit of money on that, which was kind of fun. And then, and then I started reading the Substack and getting more involved on Twitter. And then I dragged Badger 2 into this. Badger 2, I think, wasn't really on the BTB train yet, but dragged him and Badger 3 into this shortly after.
Yeah. We it was Badger 2, and so definitely what Badger 1 is saying is getting into it was more recent in terms of the BTB train. But prior to that, I mean, I guess I kind of day traded Ethereum a little bit, over the years, without really knowing kind of what it was, and then kind of just with probably with the around last year maybe, when there were some I guess rumblings in the central bank, Federal Reserve, things that were kind of going on, and then just kind of things were connecting the dots where I was just thinking, boy, like this inflationary aspect, the money just keeps kind of coming out, but like luckily we hadn't seen any kind of inflation yet. And then I think everything really kind of clicked together in that one interview with Ross and Saylor for they did basically, I think, like almost like a master class in Bitcoin, really, and kind of what it's all about. And that really kind of clicked together for me in terms of just Bitcoin being being this hedge and kind of anti inflationary aspect of everything. And so And so that was really just the entryway into learning more about the fundamentals of the system, the journey that Bitcoin has kind of taken with like SegWit and the kind of civil war that's happened. And you can't really discount the story behind Bitcoin in terms of how robust it is. And then beyond that,
Anti-fragile.
right, exactly, totally. And then beyond that, just diving more into, obviously I like Ethereum too, and so all the DeFi network, and so once you're kind of in the matrix, it just kind of goes from there.
Right, right. You take the pill and choose. The video you mentioned, Badger 2, with Michael Saylor and was it Ross?
Yeah, Ross Stevens, I believe.
Is he the New York digital?
Yes.
Digital.
Yeah, that
okay.
guy.
So that masterclass, if I'm remembering correctly, was Michael Saylor explaining to a bunch of other corporations how MicroStrategy adopted Bitcoin on their balance sheet.
Right, and also the conversation that he had with Ross, where Ross basically explained his vision. He was saying at that point, he was like, once you really start thinking in terms of Bitcoin, then the volatility and whatnot kind of goes away. And like, I really pondered that statement for quite a while, thinking like, okay, well, what does that really mean? And so, I guess now it's kind of obvious to us, right? Like 1 BTC equals 1 BTC. So if we just kind of hold on to that, then everything else is just, the encryption method that kind of backs Bitcoin along with the path that it's taken. So like, how much everybody who has adopted Bitcoin kind of believes in the story. I mean, that's just, like you said, it's anti-fragile. And so, we don't know where the future will bring us, but it's certainly probably the most robust thing that we have currently against centralization, against kind of central manipulation, so on and so forth.
Now, of course, Badger 1 and 2, you have that background in algorithmic trading. So I'm assuming you're technical. Math is maybe your second language or third language after English. How does the math in the white paper, the cryptography, I mean, when you first read the white paper, what was your first impression? How did you kind of wrap your brain around that? What Satoshi did?
Sure. I mean, I guess when I first read the white paper, actually, this was a while back, right? It was interesting, but it didn't really, I'll be honest, like it didn't, it was an interesting thing, but it wasn't, the light bulb didn't quite click at the time. But, over time, these things kind of, you learn about the trust problem. You learn about how Bitcoin basically solves the trust problem, and you really kind of have to dive in. I mean, there's that book. I've been reading it recently. Hang on, let me see here. What was that book called? Oh yeah, just Mastering Bitcoin.
Mastering Bitcoin. Yeah.
Exactly.
Andreas.
Right? So
yep,
Andreas. Yeah. So, yeah, I watched the interview with him too, and so super legit. And so you kind of dive in there and you see, okay, this is you just want to try to get in as low level as possible. The algorithm itself is you kind of start understanding. So you understand that the things really cool kind of come up, like okay, so with the mining situation, right? Let's take the mining situation happening right now. A lot of my friends are like, oh, okay, well, China controls the mining situation, and so this is really bad, and like what's really going on. So there's still a lot of high level buzz that's kind of going around with people, and it's kind of like until you really look, until there's like kind of, I don't know, some kind of mass adoption, like until this kind of the Bitcoin system enters the vernacular, like I think it's still kind of pretty hard for people to really dive in and understand like what is a Bitcoin, right? Like if we kind of take a stab at it, right, like Bitcoin is really the ledger itself, right? The Bitcoin ledger itself, and it's backed by this algorithm, cryptographic algorithm, and so one of the questions that people have is like, oh, okay, well, what's with all this mining stuff and that's happening? And so as you learn more about the algorithm, I mean, you kind of understand how organically this whole system has kind of cropped up, because, you know, there's nothing really that special about these GPU mining systems that are happening, right? Like what's actually happening is the algorithm itself has these steps, and instead of having your computer do these algorithms, they have, you know, special chips that are basically they're basically hard coding the algorithm itself into the circuits. And so these are essentially dumb computers, not like smart computers that only do the the hashing and the mining algorithms. And so you can imagine, okay, so what happened in China, probably like there was cheap energy, cheap electricity. You know, people saw that, okay, Bitcoin prices, or, you know, crypto prices in general, are kind of going up. So, hey, you know, like we could just buy some of these computers, hook it up to our, you know, like our dam right here, or, you know, coal mine over here, you know, coal electricity, you know, whatever power source they have, and make a dollar out of this. Like, so it was really just probably, I would imagine, like citizens, you know, getting real entrepreneurial essentially. And then now I think what's really happening is the government's really cracking down on that. And so it's really a loss for the people, essentially. And so, yeah, I think it's just the more that you learn about the situation, learn more about the algorithm, really try to dive in and try to explain everything in simple terms, then the more you kind of see how the whole ecosystem, how kind of robust and organic that it kind of came up. And, you know, honestly, like everything in general just kind of goes from something complex into eventually something simple enough, right? Like you have to imagine that, like, in order for crypto to really work, like it's got to be something where today it takes somebody like Andrea or Ross to really, you know, put it out to people to really explain it. But eventually it's got to be something that, you know, could be like a bedtime story, or like something that like a 6-year-old learns in kindergarten or something. It's like, oh, here's cryptography, and here's why this money system works, and it'll just click for people right then and there. Like it's got to be something simple enough, and we'll probably eventually get there. And you know, kind of once we get there, then obviously, you know, the system has made it, but also just, you know, it kind of takes away any kind of questions that some people still have today about, like, well, what the heck really is cryptocurrency, and, like, you know, what do I do with this? Is it safe? Is it a scam, etc.? So,
Do you see that financial literacy evolving where people actually understand what Bitcoin is, or more evolving to blockchain works in the background and same user interface, people are interacting with it and they don't have no idea?
yeah, I think that it's going to be a combination of both, probably, is how at least I see it. I mean, Badger One, you know, you have some thoughts too, for sure. Just jump in. But like, I think you know, it's like, if we take by analogy the internet today, right? Like everybody knows how to use it. You know, pretty much everybody knows how to use it. But, you know, do people? How many people really understand protocol switching and stuff? I mean, even I, I probably don't. So, um, but nevertheless, right? Like there's still things that, again, it's like the teenager today, or even like the elementary school student today, knows that would seem like magic, or, you know, rocket science, or whatever it is, to our ancestors, even a couple generations back, right? It's like, oh, you know, there's like, you know, whatever it is, there's a satellite connection, or there's some other, there's cables underneath, fiber optic cables. Like these are kind of concepts, you know, how do, you know, like a kid can probably understand, like, okay, how do I call, you know, call my grandparents or something from an ocean away? Like they'll be curious about these things, and they'll get a general idea of that. Similarly, like cryptocurrency will probably be something where, you know, people have a basic idea about, like, how secure it is, maybe, or you know, like the decentralized aspect of it, how they can maybe spend it, how they can maybe use a decentralized application, and the benefits of that over, let's say, you know, doing something in a more centralized way, right? Like maybe one day, you know, you buy a home on a decentralized app, and, you know, you look back in history, and you see all the, like, escrow and the attorney and all that kind of stuff that has to happen, and that just looks like history.
Just
So
looks
yeah,
like
I think,
history.
yeah.
what's it looking like, I mean, without being too specific in your employment line of business? What is algorithmic or quantitative finance? Are guys moving over to applying the same method to trading cryptocurrency instead of equities, for example?
Sure. Yeah, I think like, there's always going to be activity, let's say in traditional finance, right? So no, so these activities are not going to go away, excuse me. And but definitely, you can find plenty of layman articles that show like people who I think we saw a Bloomberg article recently that was like, oh, things that used to work, I don't know, 20 years ago or something in traditional finance, traditional asset classes are now suddenly working again in crypto. Yeah, I suppose like crypto probably right now is kind of like, I mean, it's just it's kind of interesting. I mean, I like neither of our institutional memory is probably long enough to comment very heavily on what it was like, let's say in the whatever 70s, 80s, 90s, whatever it is, too much, but it's probably some combination of like there's heavy institutionalism at some levels, and then also some levels it's just kind of like probably scalping small caps or micro caps or something like that.
Right. The same greed and degeneracy in different forms.
Yeah, yep, for sure.
Is there a way that you would approach modeling the volatility in crypto right now? I mean, if you wanted to apply some sort of model to it to at least guide your own trades on an individual level, do you think there's utility to that, given that most of us aren't really trading with that much capital to begin with?
Sure. So I guess to maybe put some more flesh around that question, like so I guess we're just, Sponge, are you asking kind of how do we maybe anticipate the volatility, or what?
Yeah, I'm asking at a very high level. We have a lot of people that are going to be listening to this that are trying to do a little bit of day trading or something similar, right? And if you're operating on a small time frame, then some kind of modeling is occasionally useful. I mean, more than just like drawing lines in a screen and haphazardly saying, "Oh, well, it looks like it's going this way," right? So,
Yeah. I mean, yeah. So, yeah, I'll just speak, I guess, to my thoughts on this. I mean, we're both just kind of exploring, this whole area too, and so nothing, nothing. I don't think I wouldn't. None of this is financial advice, obviously, but I mean, one thing to keep in mind is the volatility is extremely high, and so I don't know, something like 50%, was it, Badger one?
Something 50 to 100 annual.
Something extremely high. Whereas yeah, so like I don't know, like traditional hedge funds and whatnot, like they target like if they get something like they try, I guess. So two things, right? So S&P 500, I think traditionally the volatility is something like 25% or so, give and take, on an annual basis. So this is like double, triple, quadruple that. And then we don't even have to get into bonds, right? So bonds is like super low volatility. So keeping that in mind, I mean, it's like it's kind of what BTB has been saying, like you don't really want to take much leverage here because you'll get blown out pretty quickly. I mean, think of leverage as just like a multiplier on what you're doing essentially, right? So it's like if you multiply by 2 on something that's 50%, then it's very easy. It's like and there's so. Okay, so back up 1 second. So what is volatility, right? So volatility is really just thinking. Imagine you don't know what the future is like, and so this is just kind of like you can either move to the left or to the right. Saying let's suppose the left is down and right is up. So even if crypto yield, let's say long-term crypto was call it 0% returns, which I don't believe it is, but whatever, let's say it's 0%, then in a given year, just by chance, you could be up like 50%, you could be down 50%, you could be up 100%, you could be down 100%. I mean, these are all within that kind of like, bell curve distribution that's probably that could shake out. So then, given that, I mean, if you're levered up at all, then you can. Well, so you probably can't be down 100% if you're not levered up. So I guess we can put that out there. But if you're levered up at all, then you could very easily just, let's say you're again levered up 2x, it just randomly shakes down 50%, then you're stopped out.
So maybe we can elaborate actually.
Yeah,
Sorry, maybe we can elaborate on the thresholds for the leverage. So correct me if I'm wrong about this, but the way that crypto leverage works, especially, the percentage that it can drop before you get liquidated is inversely proportional to the amount of leverage you take, right? So say I were to take 5x leverage, then if it goes down even 20%, I'm gone. But if I take 2x, it's 50. If I were to take 3x, it's somewhere in between, right?
Yep, exactly. Yeah. So
on that note, want to touch on the asymmetry in percentage win versus loss, right? If you lose 10%, it takes about 11% to get back. You lose 50%, it takes 100% to get back.
Right.
80% takes 500%. So there's just nuances. Asymmetry.
Yeah, definitely. Yeah, so those are both aspects of how dangerous kind of this is. On Sponge's point, yeah, for sure. Like, you can just think about it. Like, if you're taking, let's say you have like $1,000 in your account, and you decide to go buy, $2,000 worth of Bitcoins, and so, if Bitcoin starts moving down, like, they might stop you out earlier, but as long as it moves down like $1,000, then you have nothing left in your account. So whatever brokerage or whatnot protocol that you're on, like, they're going to stop you out because you have no more money. So they take your $1,000 away. They sell the rest of your Bitcoin because your Bitcoin is worth $1,000. The brokerage is covered. The broker is covered because they get their $2,000 back from you and from selling off the Bitcoin, and you're left with nothing. So in that case, you took 2x leverage. Bitcoin moved down 50%. You essentially moved down 100%, and you lost everything. So that's how that would, that's kind of a simple illustration of that. And yeah, for sure, on a daily basis, if you're taking leverage, I think like if it's a frequent kind of moving up and down, then that's gonna, that's like Barb is saying, it's like it makes it harder to kind of climb back up. Now, the opposite is also true, right? So if you're the opposite is true if you decide to do this. So if you decide to be decide to lever up 2x and your thing moves up, let's say you're now up, I don't know, like 200%, you can now take more leverage. So if you're in a trending market, I guess the leverage can actually help you boost your returns even more. But that's the kind of the trick, and the hard part is like knowing when you're trending and when obviously right now we're either downtrending or kind of in a range bound situation.
On the subject of volatility, Badger 2, so we mentioned anti-fragile earlier. Are you familiar with Nissam Taleb and his books?
Yeah, so I'm obviously familiar with Taleb and his books. I'm actually kind of I'm actually going through that right now.
Black Swan, Fooled by Randomness.
Anti-fragile, yeah.
And, that's probably my favorite. It was for
so good.
Definitely listeners.
He's pretty far. Let's actually talk about him for a second, because that's pretty cool. Have you guys seen that he came out pretty hard against crypto?
He was complaining about the volatility of Bitcoin a few months ago.
Well, he claims that the long-term valuation is necessarily zero.
Oh, I haven't heard that.
Yeah, I haven't seen his argument or anything there. Yeah.
On the subject Taleb and volatility, before moving into maybe the valuation piece. So Badgers 1 and 2, you're familiar with standard deviations. Maybe it's options measuring Vega. Is the practice of measuring volatility via standard deviations, in other words, a bell curve distribution or a mediocriston, to quote Taleb, does that make sense even for crypto, or should there should be some kind of extremiston version, which is, for listeners, lower volatility but then infrequent high impact events, and not a bell curve distribution, kind of like a fat tail or a long tail?
Yeah. I mean, it certainly seems that way. Haven't haven't measured this out, let's say, but it certainly seems that way where we're hit with pretty fat events where it can, I think this was something that BTB brought up too, right? Like, you miss some of the really good days and you're out on, I don't know, some giant returns. So it can.
You miss 5 days and you miss.
Right.
I think one interesting point on the fat tailness of Bitcoin and cryptocurrencies is that you can kind of measure this by looking at kurtosis, which looks at, I think, the fourth kind of moment of say returns. And if you look at that, it's actually less fat-tailed than the SPY or the S&P 500. So it's, with all the hype about it being a quote unquote risky asset class, which it is because the volatility is high. If you actually look at the kurtosis, it's actually quote unquote more normal than SPY is, which is kind of
for listeners. Badger, kurtosis is skewness of a distribution.
Kurtosis is not quite skewness. It measures how heavily the distribution of, say, returns tilts towards either the very highly positive extreme values or highly negative extreme values.
Okay,
yeah.
So kind of like what direction that fat tail, if you will, is
right.
leaning towards.
That's skewness. Yeah, that would be skew. So its first moment is the returns, second is the standard deviation, and the third is the skewness. So that would be directionality of that, like the upside or downside. And then the actual thickness of those tails is a kurtosis. And so kurtosis is a neutral.
Okay.
Yeah, the kurtosis is actually a neutral. From like, I guess from like an investor perspective, if you are not worried about risk, then kurtosis is actually neutral because it's it could be good or bad.
Right.
Skewness, you definitely want to hopefully be positive skewed, but kurtosis is definitely kind of the enemy of anybody who wants to really, or I guess if enemy of anybody who isn't cognizant of their risks. It could also be, I guess, beneficial if you're aware of this kurtosis, but other people may not be. Yeah, so that's pretty interesting, Badger One. I recall you actually now that you mentioned that, I recall that tweet.
Yeah, I think the other interesting thing related to that is that if you look at risk-adjusted performance of cryptocurrencies, which we did a little bit ago, which is, you take something like the return and divide it by the standard deviation, you get what people call a Sharpe ratio. So it's kind of like how much return are you getting per unit of risk that you take. Cryptocurrencies in general looked better than other asset classes like the stock market or what have you on risk-adjusted basis. So what I think both the kurtosis metric and the Sharpe metric kind of say is that although and volatility as well, I guess all three of them together say is that although cryptos have been very volatile, you do get rewarded for that volatility. So
yeah.
You get rewarded for the volatility. There's the line. Plan B, I'm guessing Badger 1 and 2, you're both familiar with Plan B, stock to flow ratio.
Well, we've seen the metric, yeah.
So he did have a piece on Sharpe ratio comparing with traditional investments, equities, bonds, etc. And he also discusses not random walk. What's the efficient market hypotheses? So you guys are quant traders. What are your thoughts on the efficient market hypotheses or lack thereof? And where do you kind of see crypto falling in it? Is it efficient, semi, or not at all? Somewhere.
Well, I think efficient markets hypothesis, just a few quick thoughts on it. I think it seems like a good approximation, if you're an academic and trying to study the markets and what's going on. But I think if you're a trader, it's kind of an extremely toxic idea to have in your head, right? Because it's saying that basically you can't make money. And if you believe that, you won't make money. And I think in practice as a trader, as an individual, you can make money. So in a lot of ways, I guess we try not to think about it too much.
Right.
Yeah, it's actually to maybe bring again, like I'm only just kind of getting into anti-fragile here, but like to bring it back. This is, I think, efficient market hypothesis is actually kind of a fragile idea. It's really just kind of shoving off the responsibility of saying like, oh, everything that could be done has already been kind of done, and you're not gonna do anything here. And so there's one thing actually. Let me see if I can find it. This is something that over time, it's something that I think, like, especially as Badger once said, in academia, they really like this idea. And so kind of coming out of, school or whatever, you kind of almost get indoctrinated. And then the more you think about it, the more that you see, the more you think like, boy, is this,
It's
kind of a fragile idea here. I like this part, actually. You can find it on the Wikipedia page itself for efficient market hypothesis. I like to just maybe this quote here. So it says, in his book, The Reformation Economics, economist and financial analyst Philip Pilkington has argued that the efficient market hypothesis is actually a tautology masquerading as a theory. He argues that, taken at face value, the theory makes a banal claim that the average investor will not beat the market average, which is a tautology. And when pressed on this point, Pilkington argues that EMH proponents will usually say that any actual investor will converge with the average investor given enough time, and so no investor will beat the market average. But Pilkington points out that when proponents of the theory are presented with evidence that a small minority of investors do in fact beat the market over the long run, these proponents then say that these investors were simply lucky. So then this guy argues that introducing the idea that anyone who diverges from the theory is simply lucky insulates the theory from falsification, and so basically the guy argues that the theory falls back into being a tautology or a pseudoscientific construct.
Right.
And
Well,
so I think,
Sorry. But beyond just pseudoscience, it seems like a very convenient rationalization for trying to persuade large numbers of people not to bother even trying to get any alpha.
Right.
It's really quite sad. And thinking about when I was earlier in my career, I had almost gone into that camp because it's so pervasive in some of these institutions, and a lot of people do kind of get sucked into that and throw up their hands and say we'll just invest in the index fund and what have you.
I mean, and I think maybe for some people that's probably not a terrible idea. Like if you're completely uneducated on the subject and you really are actually going to be choosing basically randomly, then at that point an index fund just saves you some time, maybe a few fees, right? But if you're not stupid, like, come on, like you could do a little better than average.
So efficient market hypothesis seems to be the cop out. If I had too much to drink last night is a cop out for, well, I won't say the demographic on the podcast, but you know what I'm talking about. If COVID is the cop out excuse for institutions and governments to lower quality, raise prices, then maybe efficient market hypotheses is the cop out excuse for I'm not a good investor, or I don't want to try, so I'm going to pretend that it's impossible and I'm just going to buy index funds.
Right. And to be fair, it is pretty difficult to make money in some markets, especially competitive markets like US large cap, for instance. But that's not to say that capable people, if they put their minds to it, can't do it. They surely can. And I think this kind of it's become almost like an ideology, prevents fully capable people from making full use of their skills. So
I mean, sorry, it's really bad because like I have a friend who's like a senior dev at Bloomberg, and he's absolutely brilliant, right? And he's involved in doing he writes their language for the Bloomberg terminals, and so he's around a lot of finance people all day long, hears stuff. If he actually wanted to make a few investments, I'm sure he could read up on something that he believes will go the right way in the next few years. But he just goes and buys the index fund too, because it's a full out religion for people who have gone down the rabbit hole with that.
Right.
Yeah. I think the one thing that I will say that I guess thinking about efficiency, does bear fruit when you look at a price, and the price, it's often useful to look at the price of something, especially in, call it, like large cap, even maybe like Bitcoins, and just to say, the price is actually what it is. It is what it is. Like that is like a fair market value. Like if enough people are kind of looking at it, that is the fair market value. So this is actually useful if some people can become kind of too dogmatic the other way, where they become dogmatic one way or the other, where they might say like, okay, well, they might have some kind of fancy valuation model for something, and then the price falls, and they buy into it, and then the price, let's say, falls again, and they buy into it again, and then they keep thinking that this is going to work. Well, somebody else might actually have more information than you. Somebody else is doing something, and so the price you're getting at the time that you're getting it might actually be as efficient as it could be at that time. So this is, I guess, thinking about Bitcoin pricing right now. I mean, it's kind of just hovering around the 30,000-ish kind of valuation right now. So when it comes to like the bulls and the bears, it's like it's like that's a pretty high price still. So sure, it's had a pullback, but as for some reason we think that this price is fair, and so there's no need to call. There's maybe no use calling Bitcoin, whatever you want to call it, like Bitcoin 3,000, Bitcoin some low price if you're a bear, and to say that okay, now it's gonna, the next stop is like 60,000, 100,000, 500,000. Well, there's definitely barriers to those things too. So the price is where it is for some kind of reason. So there's that efficiency aspect, and it's useful to keep that in mind. But I would say, Sponge, like with your friend and kind of with everybody who's in this pseudo religion, pseudo science, so for some reason I think people like equilibrium. So I guess like maybe like efficient market hypothesis presents a nice equilibrium. It's like, okay, this thing is just gonna be as efficient as it gets. The system is what's real. Everybody who kind of fights the system creates a system that's quote real, and so it's a nice balance, I guess, as a mental construct. But instead of actually embracing that kind of balance, I think that it's possible that sure, like maybe whatever the numbers are, 99% of mutual funds don't end up beating an index fund. Well, maybe that's a system that maybe that's a better system. Maybe that is a beautiful system for humanity itself, right? Like the struggle is part of the meaning itself. And so everybody should kind of roll up their sleeves and try to do it if they think they can do it, but just be prepared for somebody else to be better than you, and just to be humbled by kind of what you see. And so I think the true efficiency is just knowing that there are people better than you, but that doesn't mean that we have to say efficiency is the end goal. It's it's really about the struggle itself and the chaos that's kind of there.
Would you think that, so because here's the thing that occurs to me, right? That if we're talking about efficient market hypotheses, it seems like the idea that everything would converge to some average in the end, and that your individual efforts wouldn't actually help you in the long run. I mean, a lot of it seems more like a psychological effect that's being imposed on people as opposed to something that's being borne out in the math. Like, I'm not going to lie. Like when I hear it, and like from a very visceral perspective, like my gut instinct is to yell out like, "Huh, sounds like communist propaganda to me." But like, okay, like,
Have either of you guys read Psycho Cybernetics?
No, but I want to hear about it.
Yeah.
Okay, I've seen that book floated around in the jungle, and I just started it, and it's really quite fascinating so far. It starts out, it's a plastic surgeon who describes how when he operates on people, he's not just operating on their body but on their minds as well, because they change their physical image and it reshapes their mind, and it turns them into an entirely different person, human being who can do different things. So EMH is a lot like that in some ways. If you really believe in it and drink the Kool-Aid, you won't be able to make money in the markets because you won't be able to see it. So yeah, I mean, it is kind of, to your point, like a self-fulfilling prophecy.
Yeah.
Inevitably, if you start telling people that nothing they do, I mean, like I don't know, like the whole thing just seems like stupidly suspect from the start. I'm not gonna lie, right? It seems like you're gonna tell people, okay, nothing you do will make a difference in the end. There's no like new profit. There's no value added or something. I mean, is that really what we're getting at here? Whether there isn't some way to be unusually good at making the market more efficient. I mean, like the gains in capital allocation. I think the whole game is that if you allocate the capital most efficiently to the companies and services that most deserve the capital, then you gain because they have the right amount of capital that they deserve, and therefore they profit more. And the whole market goes up, right? That's like the whole argument behind finance adding value, right? So like, are we supposed to just pretend that like everyone is equally good at doing that? And it's like, oh yeah, it's fine. We're all the same good at picking out all these companies.
It's unequal opportunity, equal results, right?
Apparently, yeah. That's what they would have you believe. I mean, that's why the whole thing is silly. It just has everything exactly backwards.
Yeah. No, I think when you guys are the sponge, like when you say your gut is this is communist propaganda. I mean, your gut is you're kind of singing to the choir, like your gut is in a healthy place in my opinion, but for a lot of people, I mean, I don't know, it's maybe some kind of like mentally, we just like to kind of medicate away our pain in some ways, like whether by ideas or some other methods, where just they want things to fit into kind of a neat box. And so efficient market hypothesis is kind of like this neat box. It's like there's a system, and like you said, it's like the capital kind of bubbles to the top and so on, and
You
like
can write down the
capital,
formulas for it.
right? But there's
on
no
the
need
subject.
to assume. Yeah, sorry, yeah, just go ahead.
On the subject of efficient market hypotheses, and I'm assuming we're all familiar with Plan B, stock to flow ratio. Now, for listeners, Substack, stock to flow ratio is why you get the meme of 100K Bitcoin by Christmas 2021. Stock to flow is the inverse inflation rate. 2% inflation rate would be 50 stock to flow. Stock to flow ratio uses this linear regression comparing the logarithmic of the market cap of Bitcoin to the logarithmic of that stock to flow ratio or inverted inflation rate. Badger 1 and 2, you guys are math, technical backgrounds. Kind of what's your perspective on this Plan B stock to flow ratio that he's used for both Bitcoin, gold, real estate, etc.?
We haven't looked at that metric. I think to answer that question fairly, we would have had to look at the data, which we haven't done. But I think a nice test would just be to backtest it. Like, you think that this metric predicts returns, then if you went long or short Bitcoin when the metric hit certain thresholds historically, how well did you actually do? I've seen the nice pretty pictures of the bands and the prices going, the stock to flow, bands and it reverting. But so far, I haven't seen someone show results from an actual strategy, which I think, practically speaking, is what we actually care about. Or maybe there has been one, and I just haven't seen it.
Now, of course, the strategy Plan B proposes is continuously dollar cost average into Bitcoin, not so much the timing.
I mean, it seems like a pretty good strategy, right? Dollar cost average into Bitcoin, Ethereum, a few large cap crypto. I mean, it would be like the smarter version of what efficient markets would tell you to do for stocks.
Right. Yeah.
It does seem the stock to flow. So this came out a little over 2 years ago when Bitcoin was floating around 3K. That Christmas time this year is a test, right? So the first stock to flow predicted 50K. It hit that. The next one's predicted 100K by Christmas of 21. But the newer one, Plan B, is the cross asset, which predicts almost a $300,000 Bitcoin by Christmas. But that's where he took the same regression equation, and he took the stock to flow ratio for gold, and it gave him the accurate market cap for gold. He took the real estate, accurate market cap for real estate, diamonds, platinum, etc., silver. For me, and I'm not technical, I'm not a quant background. if you take the same regression equation and you apply it to other assets or other inputs and you get the right answer, is that not a pretty damning
Yeah, that's a good sign to see.
sign
That's a good sign.
Okay.
That's definitely great. I think people in the industry would call that an out of sample test, where it's like you fit this model on Bitcoins and then you check it on data it hasn't seen before, and if it works there, that's pretty good evidence, right?
Yeah.
But I think another thing to keep in mind when you're doing this kinds of analysis is what the horizon is for predicting kind of returns. I'm not too familiar with how they did the studies, but if you're predicting say returns out, I think the numbers you just tossed out were like by the end of the year or something like that, right?
Right. Christmas 20.
If you're trying to predict returns out several months or a year or more, then how many data points do you really have for that, right? So that would be one kind of point that, and it depends how they did the analysis. That it may be fine, but that's something to keep in mind.
Yeah, and I guess I'm more of a behavioral kind of guy, and so like Badger once said, we haven't looked at the data itself, but as we're even talking about this, I'm just thinking, we should also be trying to form, because this thing is based on this regression, which is good and all, but we should try to think about some other hypotheses around specific, let's say call them like events or specific structures around this equation, and kind of like what would be a good question to ask, what would an answer be to that question, and then can we see the evidence of that, can we make a prediction of that, and see what kind of comes out of it. So for example, I guess I'm kind of aware it's like, okay, so the stock to flow, we're talking about some of this has to do with mechanism of Bitcoin itself, right? So the question I'm curious about is, okay, so why does this work? Like why are we making these forecasts for what the price is? So one component of this is going to have to be, okay, Bitcoin mechanism itself, and how the circulating supply, how frequently another Bitcoin comes to circulation. But another aspect of it is just going to be, well, since this pricing is happening, let's say we're saying Bitcoin 100,000, the pricing is happening in U.S. token terms, and so some of this has to do with the M1 or M2 money supply as well, and the velocity at which money is being exchanged. And so I think we can probably ask some interesting questions about, okay, given where this is, so let's say Bitcoin, let's say according to this model, so far we've been accurate about many things, and let's say Bitcoin doesn't hit 100,000 by December. Let's say it actually hits I don't know, we're at 30,000 now. Let's say it goes to 55,000 by December. Okay, well, so we're off, and so somebody who wants to criticize the model might be like, aha, see, it was wrong. Well, actually, to me, that's almost, it's great, because we started out with a pretty strong hypothesis, pretty interesting hypothesis, and now we have a deviation from the data. So it's so then now we want to ask, it's okay, what's changed? I don't have the answer to that, but those are it's really the beginning. If you get something wrong, it's really, to me, it's the beginning to asking more questions to figure out what it is that you missed, and to try to form a stronger hypothesis next time, to go to bat again next time with a stronger arsenal of stronger toolkit, stronger thought process, rather than just kind of saying either accepting your loss and say, okay, that's it, or having somebody else just kind of laugh in your face and claim victory. So
it gives you more constructive questions to ask.
Exactly.
Right. So high level, DGen Island 2035, Badgers, Honey Badgers, y'all have been in traditional finance a few years. Or actually, I'll back up here. Have either of you read Sovereign Individual?
We both read some of it.
I'm mostly through it. Yeah, I'm actually, so I picked it up and then probably 75% of the way through now. Okay,
so you've gotten the meat of it. Takeaway impression from Sovereign Individual, written in 1997.
Yeah, so I mean, I think very powerful book. Obviously it talks about cryptographic currencies before before any of us ever heard of Bitcoins, probably, or even thought about this possibility. So that's pretty impressive. And I think interestingly enough, it lays out some. I like how it lays out some of the facts in the beginning about kind of where the world was, right? Like the story about how we kind of started out as let's see, so like hunter-gatherers, scavengers. We had a lot of land, a lot of resources. I think I forget now what it was like. Basically, it was like the ratio of land to people was something like if you'd have to be like extremely wealthy today to have real estate of the size that our great ancestors had at the time, and then going from there to basically how farming really led to the evolution of violence, and so how like protection of property kind of like, well, so farming basically evolved due to these pressures from lack of resources, and then from their end we have violence, and then quickly, almost very quickly, we end up with the industrial age that we have today. So I really like that story. I mean, it's I'm no expert in anthropology or anything like that, but definitely that I think was one of the strongest things in the book, where it felt like it was kind of reasoning from first principles in a way about how we get from our ancestral roots into kind of where we are today. And so where like this is like so why violence is such a kind of important important concept to think about, to ponder about, to figure out where the balance of power is, not in a like communist kind of way, but just just hard facts. It's like, okay, well, who controls the power? And so like as that moves, then politics moves with it, not the other way around, I guess.
Force theory of government.
Right. And I mean, incidentally, I was I guess there's another book, Homo Deus. I don't know if you've heard of that, or
I don't think so.
Read of it. Yeah. So I started that one, and then I kind of I'm more into sovereign individuals right now. But they also started in the beginning laying out a pretty grim picture of of society back in the day, which really got me thinking. I mean, so something like, I believe it was I'm gonna get these dates wrong, but something like in 1520 or so, the Spaniards, I think, went to Mexico, and population was something like 22 million, and by 1580, so like only 60 years later, the population was 2 million. And something like during the Sun King's reign in France, 15% of the people were dying from starvation, whereas that's, people were literally dying from starvation, so let alone people who had kind of like, who God knows what they were eating, what percentage of people were doing that. And so I pretty much only I didn't get too far in that book, but the point that was being made there was also just like how we kind of come from these really grisly roots into quite a kind of nice condition that we're in today. And so, yeah, I mean, to me, it's like this whole decentralization with cryptocurrency. I mean, it's super important because we're kind of resting in the most prosperous, most peaceful time of our history, of human history, and there's really no guarantee. And if we were to try to like, if we wanted to believe that we've kind of solved everything, that would, in my opinion, be pretty foolhardy. And so we don't know when we want, when something will hit that in our current state of things that we can't really kind of work our way out of. And so as much as we can be anti-fragile, right? So as much as we can kind of decentralize and give people the tools to really take ourselves to the next level and to survive, to have backup plans, to be robust, then the better. And so I think, crypto is definitely a part of that, and that's why, that's kind of part of the picture that I see. And so sovereign individual, I think, does a good job there too, laying that out.
What sort of backup plan do you anticipate implementing yourself?
Oh, I don't know. I mean, to be honest, I mean, I think, well, for me, I think it's long term. Let's just, I want to stay optimistic, so I hope, we don't have to bunker down or anything like that. But I think it's just, in terms of what we can do here and now, I mean, obviously, like, um, keep trying to contribute to cryptocurrency and decentralization in any way we can. For individuals, like, we want to try to be healthy. We want to try to just, be as physically fit and healthy as we can keep learning, keep building authentic connections, things that really that seem real rather than things that kind of get us into moments of where we feel like we lack agency, where we feel like we lack real connections to people. I think these are things that hopefully will last beyond any storms, that and will hopefully help us weather storms that come our way.
Do you see a potentially ugly transition if, as sovereign individual suggests, there's this decline of nation states?
Mm-hmm.
This loss in ability to tax through inflation and also direct taxation as people move their money, cyber money, as they called it 25 years ago.
I think it's gonna depend. I mean, to be honest, like I'll put it out here. I mean, I think one of the smartest things that the U.S. government can do right now is actually buy bitcoins, because I haven't really thought through all the implications of, for example, what that would mean, but like in terms of the value of, let's say, the dollar or something like that, and the value of Bitcoin itself. But I think it's an interesting thought because it's a real hedge against, on the one hand, the central bank kind of is obviously directly or indirectly, and the Treasury as well, just kind of putting out all this printed money. But on the other hand, if you own a large supply of Bitcoin itself, so that's kind of like an interesting hedge as well. So I guess that's kind of preface where, we're at this kind of interesting time where there's definitely a lot of like tribalism in pretty much, a lot of like all aspects even, and somebody who really tries to be at the frontier of things, try to think outside the box, that's kind of looked down upon by so many institutions and committees and whatnot. But at the same time, I mean, there's definitely a path where I feel like, again, to be a little bit more optimistic, I think there's definitely a path where we just kind of gently go through a transition. I mean, this is where perhaps like we have to kind of adopt more of a compromising mindset, whatever that means, where it's kind of like, even if you think you're right, the harder you push against the system, sometimes the harder the system pushes back. Whereas
Right.
if you're right, but you kind of keep a calm head and kind of just try to teach people what you know calmly, and try to just have good conversations with people, try to keep educating whoever's willing to listen, try to find opportune times to kind of insert information to try to get people to see the light. The hope is that eventually enough people kind of adopt the same mindset, and democracy as well as truth eventually kind of went out and changed the world, right? And so, sometimes I feel like you often see people who, and I don't blame them. It's like they learn something that that almost seems like a conspiracy theory, or if anybody heard it, they'd be like, wow, that sounds like a conspiracy theory, but it's actually true. And because nobody really listens to it, then they kind of lose their head over it, and they become even more kind of boisterous and really almost unreasonable. And then the more people kind of just call them out for it. But in reality, when you take a step back and you see like, okay, how do things change? Well, things actually change probably in really boring ways, because that may be the only way that, I mean, I don't know, but like that may be one of the only ways that the world can change without undue violence and disruptions. It's just that, like, eventually the world changes, and the people who are kind of the pioneers are kind of just so jaded by that point they don't even care anymore. Nevertheless, the world has changed and they've done a good deed, and so if you I mean, I guess it's just if everybody just kind of sets aside their ego and just try to move things forward in the best way they can, then all we can do is just kind of hope for the best.
Back to first principles, it sounds like. What fundamentally changes civilization? And tying into, you mentioned hunter-gatherers to the agricultural revolution, industrial revolution, technology changed.
Right.
We didn't have property or really war until we found a way to cultivate the land, tie ourselves to a specific location, and then industrial age brought, well, following the printing press and gunpowder 500 years ago, and economies of scale, returns to scale in size at a specific location, factories, armies, employers, cities.
Right.
It seems in sovereign individual is one argument that war and violence in the long run will decline because that returns to scale go away. You can't use an army or fiat inflation to tax. You can't use an army to co-opt others into doing what you want, because now we have asymmetric encryption.
Mm-hmm.
You can't take away from everyone on a whim, and nor is there an advantage to having a large army.
Mm-hmm.
Asymmetry.
Yeah. I mean, I think there's, I think at least in the foreword that I have in my book, I think it was by Peter Thiel, and he was just saying, there's things that sovereign individual, we should focus also on the things that it gets wrong. And so, I guess he mentioned obviously like the rise of China, and so the state becoming even stronger. That might be actually like kind of like you take the facts for what they are rather than hope that they change to become, to fit the model of the book. Right. And so, yeah, for some reason, I guess there could be periods where, there's definitely things that kind of can go against the model of what the book is saying. And so we do need to update the story, the model for kind of like what the facts are of the day. And so I don't know, there's definitely going to be, who knows what happens. Like, if I suppose given the FUD that we've seen with the mining, the mining news have come out. So with
the energy.
Right, the energy. I mean, some of this is like you look at it, you're like, okay, well, all the coins are on kind of like proof of stake are also moving down. And there's no energy, there's barely any kind of energy concerns there. And so this is really just kind of like what we call beta. It's just like, okay, everything's just kind of selling down. So, who knows what happens if the Fed releases their own coin or whatever, whether that could do anything to the ecosystem. I wouldn't necessarily count it out for sure, but nevertheless, I mean, I think with any technology, you could always kind of focus on the bad, but you could also definitely also see the good. And sometimes by focusing too much on the bad, it's definitely it can really both distract as well as cast a kind of put you down kind of on the wrong direction. I mean, Badger One and I have talked about this recently, where obviously for all the kind of faults that Twitter and social media today kind of have, and you could go at length thinking about those things and thinking about what the world was kind of like before we had these things, before people were kind of able to be so easily gaslit over social media and all this other kind of stuff. But nevertheless, I mean, look at us now. Like, we're able to connect, right? Like, so there's good coming out of social media too, and we're able to have these conversations that we wouldn't have been able to have 5 years ago. I mean, right. So I think we just want to try to keep focusing on kind of what's good and try to evolve the system and over time to really just take the just keep iterating and trying to take the bad from from the good and kind of coming up with new versions of things, because eventually, and it maybe after generations, maybe after a whole generation, so maybe we don't see it or something, but for how terrible something can be, like eventually, we reach a point where things are, better, let's say. And so if we just kind of keep aiming for that, then somebody down the line will hopefully be able to kind of reap the benefits of that. And that's kind of decentralization as well. Like, our minds, humans, we tend to gravitate towards what what we like. Sometimes that's kind of like our basis desires, but sometimes that's also like some really noble pursuits. And so, like, again, it's like with, let's say, social media as an example. We've evolved from kind of social media to having like podcasts, and so far, and everybody has probably a favorite podcast at this point. And so, it's just what comes out of the other end of this that can be even better. We should really hold out hope that those things will happen.
Optimism.
Yeah, and the other thing too that's kind of fun is that we're seeing social media evolve to include even transient mediums. Like there's something kind of wonderful about the fact that we can all hop on spaces too, right? In addition to the podcasts and the tweets and all of the other more permanent forms of media that we're otherwise restricted to, right?
Yeah.
Because we can, in a way, it's kind of like, in a way that it's all returning back to nature, we started off with like books that were hard to write, that were permanent. Then we moved on to TV that was impermanent but broad and centralized. Then the internet, permanent, broad, and now we're going back to having that scarcity, which really gives the conversation something special.
Right. Yeah. There's it's almost like it's like a pendulum, right? Where it kind of, one thing, this technology is breaking things apart. And inevitably, there's probably going to be a centralization around the current technology that we use again, where, power law and whatnot, things kind of aggregate into big components. Like cryptocurrency will probably go through this too. Everything is, for us, it's like everything is awesome right now, but eventually something will emerge that's going to be monolithic, and it's going to be a headache. But we can, again, hold out hope that we're going to move past that and decentralize once again, and back to nature, as you say.
I'm a fan. That part's pretty cool. I imagine if we could actually, because I don't know, in a way, the decentralization is actually bringing us back to nature, right? There's a whole vein of thought in relationship to the things we've been discussing tonight, in which it seems like humans are moving back to being like hunter-gatherer bands of like little tribes of people that will sprint for a little bit, do a project, and then rest, and instead of doing that 9 to 5 grind for some large organization.
Eat, sleep, poop, and capital F.
I'm a big fan of all of those things.
Yep. Well, I think, I mean, we're definitely fans of that. Human nature being what it is. I mean, it's, we kind of like you said, there's this vein of things, and we kind of say like, okay, there's this, I guess maybe this decentralization is good, and we're kind of back to nature. But I mean, the people who kind of champion the system, the systems that are kind of antagonistic to the nature approach. I mean, there's people in there too, right? So there's people who do enjoy being part of a monolithic kind of group. They do enjoy the security. They enjoy not having to think about things. They enjoy having to be able to outsource kind of things that they could do on their own to like, other people or kind of other institutions or whatever have you, basically not put in the effort themselves. And so, I mean, I think it's always going to be this tension, and maybe that's really the, and we can't really discount those people either, right? Like, there's definitely, I can understand why people, depending on the situation they're in, depending on the age they're at, there's real, there's something real, I guess, comforting as well as life-saving about some of those institutions. And so I think there's always this tension, and it's only when things, I think, become a little bit too stifling in one direction that then the pressures kind of push us to kind of go another direction, right? And so and to try to do something else. I mean, I guess speaking of books and kind of with Sovereign Individual, there was that passage about And this is again like how technology really changes things, but it has to I think it has to be a combination of technology as well as the socioeconomic circumstances, the social circumstances in which people have this urge to change. So I guess whatever it was in the medieval times, writing and reading were very precious commodities, and it took a whole scriptorium of monks to transcribe the Bible, and then here comes the printing press, and then all of a sudden we're able to basically mass produce Bibles. And so this is I didn't get to make this point earlier, but I think like I guess whatever have you, I don't know how everybody has learned their history, but like in my impression, it's like when we learn history, let's say in elementary, high school, middle school, we tend to learn about these pretty interesting facts, pretty interesting people like Martin Luther, okay, Reformation, or Marie Antoinette, let them eat cake. But really, what seems more real to me is the actual circumstances in which people were living. Again, it's like people were starving to death. It's like, it's not about this famous quote that he said. It's like the context. It's like, well, people were literally starving to death, and we have no idea what that's like for 1 in 7 people that we know to just like die because they had not enough food, and then for like I don't know, 2 or 3 other people to be eating God knows what. So nobody at the time was nobody at the time among those people were thinking about, wow, this quote that this person said. I mean, until I guess she said it, but and then whatever that triggered. But nevertheless, it's like they were probably they were pushed on by kind of what they by their circumstances around them. Similarly, with the technology with books, it's like, okay, well, the printing press was invented, and probably there was enough kind of pressures at the time where people said, look, I can learn this on my own, and then enough people kind of saw the utility of that naturally. Like people gravitate towards, they're oppressed enough, it's like they gravitate towards freedom naturally, and so this technology kind of brought them freedom. And so we learn about the whatever it is, Reformation, and so Protestantism versus Catholicism as this like great transition, but it was really the printing press that was the driver of that. So I think we'll just this could just be again the pendulum, right? It's kind of like we're at this moment where a lot of things are kind of pushing at the seams, pushing in a very monolithic direction, and so hopefully this is a time where something like cryptocurrencies can really take us maybe to the next level where we can be back to nature until enough people kind of crowd into this system, and then we need to build. I mean, I don't even know how we do it, but I guess I guess it could be that like there's always going to be centralized coins around, and that's going to have some more adoption in some sense than something that's decentralized, because people like that security.
Badger, have you read the Bitcoin Standard by Safadane Amos?
I haven't.
So he proposes the analogous to the gold standard in the 1800s,
okay,
where decentralized network of banks would hold, securely store your Bitcoin. But for the medium of exchange, banks would issue tokens. There's no central bank. There's no monopoly on the money supply. Different banks would issue tokens collateralized by Bitcoin, kind of analogous to Maker DAO, how the maker is the collateral, but then you're issuing or minting DAI stablecoin.
right.
And that using Bitcoin, for example, and you can say Ethereum today with the transaction cost, to buy a cup of coffee is like using an F-35 jet to pick up a cup of coffee.
Right,
when you can
right.
send unlimited value across space and time, only the highest value transactions will actually be used on chain. That's at least the theory proposed by Safadane Amos.
Right. Yeah, that sounds plausible. I mean, we're that's I think the hope of layer 2 as well, right? It's
Lightning
you
with
have
gold,
yeah, exactly. Yeah. So yeah, I mean that's seems plausible again, because like if we want to bring again, like I think there's some of us who are very comfortable with being kind of nature, and then but if we want to kind of bring everybody along and certainly not to kind of reduce their experiences. I think it's very important to kind of have something that actually works for people on a reasonable level. I mean, we're kind of degen autists, right? So some things that kind of work for us don't really work for other people. And so it's like, if you want mass adoption for something that's good here, then ultimately that could mean certain things that are less palatable to us, but that can be understandable, that can happen to the system. And I don't know. It'll be interesting to see, because part of the philosophy, part of the ability to just continue to create these coins and continue to kind of vote for our own little system, and to have like almost like countless spin-offs of things if we so choose. I mean, that's really the libertarian's dream in a way, right? It's like you can always just kind of have your own little system. So we'll see if maybe the meta system here will hold out, and we'll always be able to just have our own little paradise, despite the monoliths and the institutions that kind of have to form around
distributed freedom, distributed authority, distributed power.
Right.
Cool. Good shit. We'll wrap it up here soon before we hop off. Honey Badger 1, 2. I know there's a third out there somewhere. Appreciate you guys hopping on and sharing a little bit, putting a voice to the avatar, if you will, bringing your brand personality to life. Of course, you could talk your ear off for hours. I mean, we touched on sovereign individual and anti-fragile and efficient market hypotheses, and those alone are hours, days worth of conversation and rabbit holes. Any kind of takeaways from the conversation or the jungle as a whole? I mean, have you really seen anything like the Bowtie jungle before, offline or online?
I think the way that I think about the jungle is I don't meet people, like people in the jungle in real life almost ever. And when I do, they usually become, some of my closest friends. And this is, you can tell just based on the type of media they consume, even people in the jungle. So I'd say, it's kind of goes back to one of BTB's recent tweets, which was something like, nowadays with the internet, autists can kind of meet each other, whereas before they'd be kind of sitting alone by themselves and dealing with all the BS in the world. So, I think it's pretty incredible what the types of people, that have managed to aggregate there.
Yeah, for sure. I mean, it's a pleasure meeting you both on this podcast, and just talking in the jungle. I mean, I think the joke here, like Badger One has said, he brought me along here, was I, as you can probably tell, I can go on for hours or even days probably about a lot of these topics. And before, I was just running Badger One's ear off with these ideas.
right.
And now you have a whole bunch of people whose ears are coming off.
You gotta come on the jungle and meet some of these folks. So here
I am. That's great.
You can see this. I mean, of course,
Aubrey,
we get to know each other virtually. We start to realize like these are the kind of people that we wish we had more of offline, but by the realities of internet versus real life, it's hard to find them. It's hard to get that filter like the Bowtie jungle.
Right, yeah. And it's a real blessing. I mean, in some ways it's like like I said, it's like I would just talk to Badger One here and I felt pretty fulfilled. But this is a more efficient way, I suppose, for us to just kind of find each other. So this is great. Yeah.
So I'll drink to the Bowtie jungle.
I
Cheers.
Cheers.